All right, guys. So we took one L, as you can. I know you saw the recording already. But I'm gonna go over the trade here. Where we took the trade, I'm gonna go like review it. I still need to journal it a little bit more. But here we took the entry off of the 3-minute, PDRA getting inverse here. So we had two down close candles. You can see this was your bullish order block. This was your little proportion block. As soon as we retraced back up into the proportion block, and this one of course overlapping, we entered. I expected this 50% to hold. Then we had a little SIBI inversed, and then we had a SIBI there, and then we had a BISI that got inversed over here. And I was expecting this right here. As soon as we retraced to push us lower, and we had a 1 minute, buy side imbalance. As I said, we needed to make this an inversion to form. We needed this inversion for the gap to form, and we were unable to get that. Now we're asking why, and then eventually here we did have a 3-minute. We had a break of market structure with the 3-minute inversion order block showing us signs of forming a market maker sell model to complete it to the downside with the standard deviations there. And I asked myself, why did this not hold? Why did this price action not hold? Usually this does hold, but why? Why does it not hold? Because again, it's going against a higher time frame order flow. Here, don't try to pick a top in a bullish market. Simply follow the higher time frame order flow. Wait for what? Wait for these higher time frame PD arrays to be hit to then look for what buys. That's kind of why I'm kind of like really trying to step away more from the indices and then go to Forex, because indices we're bullish, strong bull. We're breaking all-time highs. Same thing with gold. Same thing with crypto right now. Those markets are good to be buying, the retracements. When we dip, that's when you buy. The other markets like Euro, FX, you can trade whatever. You can trade the reversal, the retracements, the expansions, the consolidation, because you have more price action and you're not, breaking all-time lows or all-time highs. You're inside of a range. Usually range trading for me is the best. That's kind of what I found from my results, just trading Euro and GU. I think I might focus a little bit more on there. I feel like that's like a little bit more on my caliber. Same thing with GJ. I found a really good trade there. Trading ranges are usually like something I specialize in, especially when we're like creating the top or the bottom. Usually these markets are a little bit more hard to navigate, especially trying to catch the top or the bottom. I'm not saying you should. That's kind of what I'm just saying. Focus on the retracements. Whenever you're retracing into a higher time frame PDA, like this 1 hour buy side imbalance here, we had a 1 hour buy side, 1 hour CRT. We can see we completed it here. Having the higher time frame be bullish, why are you shorting? There's no need. We can wait for that retracement and trade the higher time frame PD arrays for more confluence. So we had no higher time frame PD arrays, and this is kind of why, again, you can read the lower time frame order flow really well, but if you don't have anything backing you up on the higher time frame, you're likely to have a less high probability of winning over a long period of time, over a consecutive amount of trades. If you have the higher time frame backing you up, even if it's like a one hour buy side imbalance or like a 30-minute buy side imbalance, that's still high confluence, and you can scale down to the 1 minute and find a very good entry, and use the 5-minute to refine it. On the 4 hour, this is the 4 hour right here, this is the daily, and then eventually here on the 15-minute time frame, we had a 15-minute SIBI. This is kind of why I was a little bit more bearish with a 15-minute SIBI, but whenever I saw this not holding, I kind of instantly knew we were gonna get stopped out. So here we're using the discount with consequent encroachment there, and we failed to make it an inversion by closing below it and using it to push lower. So as soon as we close back above, I instantly, or right here, instantly right here, as soon as we close back above and we opened this candle, we moved lower and went up higher, I knew it. The SIBI was not going to hold. We had multiple times to push, 1, 2, 3, and we were just unable to push, so instantly then and there, I was like, all right, yeah, we're probably not going to, move lower. 3-minute time frame, this is again, 3-minute bearish order block, unable to push lower. We're going to show you guys the aftermath. Even though we had SMT at the highs here, we still had SMT at the lows. So this is indicating a reversal here at the lows. We should have spotted this sooner. We should have been more aware of the potential reversal occurring here. Why? Because there's SMT at the lows. Even though this one did form SMT at the highs, that doesn't mean anything because it formed SMT at the lows. Here in this scenario, you don't want to be trading. You don't want to be trading anything because again, you're bullish on the higher time frame. You're forming SMT at the lows. Usually, what does that indicate? A reversal. And then here after, again, 15-minute time frame, we swept relative equal lows. We swept, key. As soon as you enter the trade off of the inversion, you can't, because again, this right here already swept the lows, already met the intermediate term low, and then eventually on the 15-minute time frame, you can see we made this inverse and we met the buy side liquidity. These two candles right here, the span of 30 minutes right here, we swept the low and then we met the high. And then on the 3-minute here, you can see that there. We can see we're now respecting the inversion order block there, and we're pushing up higher, now holding the 15-minute SIBI. We did create a propulsion block to push us up higher here. So you can see that there pushes up higher. We had this right here form. Again, what is that? Your breaker right there. Again, the breaker, like an inversion order block, are usually like the same thing, but usually it depends, it depends on narrative. Again, you want to focus on that. And you can see the 50% was really, really respected. As soon as we closed above the 50%, you can see we wicked, and then eventually we opened up, we wicked, and then eventually we moved up higher. And we formed this inversion for early after all. So this would have been your best trade idea right here to then eventually use standard deviations here to target higher prices. And we're going to see what happened. You see we are still yet to move. This would have been your trade idea right around here, right there. What would your stop loss be? And honestly, in my opinion, it would probably have to be at the rejection block low. And I would simply be targeting this right here, like a 1 to 2 So yeah, that's kind of what my trade idea would seem to be like. Again, I was lowering the risk. I do plan on like doing 1% risk, especially with trades like this. Especially, you know, I'm going to try to classify. Again, I want to take every quality. This is another thing. I want to take only high quality setups. I don't want to be taking lower quality setups, because then eventually my risk is going to change. But right now, I'm going to try to take as many high quality setups I can and only be risking 1% on this account. On the other phase 2 account though, I might go a little bit more heavy, and I might, you know, use my mechanical approach, but also be mixing it with discretionary. So, you know, I might do that, and I might do this for this one also. So I might have to continue to review over the weekend and just analyze. I might end it early here for this week. So Friday, I probably won't be trading. If you don't see a video tomorrow, that's kind of the reason why. And let me show you guys the account. So again, here's the account, 0.34, basically what we had the other day. So like Wednesday, this is Wednesday's account, 0.83441. This is 2-1 now, so we lost like 20 more cents. Doesn't really make a difference, but again, good risk management. I want to continue to review and experiment, you know, like I'm gonna have to continue to analyze and see what I can do better. Even though we did take this loss, we could have easily re-entered, got another win, but again, I'm sticking to my rules. 1 trade a day. I already checked it off. This is my 1 trade for today, and that's it. Yesterday I took 2 trades. You know, I don't want to be breaking that rule. I want to be taking the highest quality setup, and even if I lose, learning from that, you know, experience and having good risk management here on this account. And I plan on getting more accounts really soon, so we're able to like be less attached. Whenever I lost this trade, I was not really too worried, or like wasn't really like hurt, I guess you can say. I wasn't super attached to close it early or to do this and that. I just let it run, let it hit the stop loss. It wasn't much risk. I was like, okay, cool. I'm cool with losing this trade, and I'm gonna learn from it. So yeah, that's pretty much really it. You know, you can see here, breaking all-time highs, trading at all-time highs. It really isn't the best price action like I saw on the daily here. Here on the daily, you can see 2 days, 268%. I mean, 268 pips, or handles, whatever you want to call it, 4.69% in the past 3 days. You know, like it just really isn't ideal for us to, you know, continue to expect speed and like hard delivery in the trade idea. Even though this is, you know, lower time frame, this is good. Higher time frame wise, this is like the best. You know, early AM session right here, whenever you start to move up higher. Even yesterday, you know, whenever you had this right here in the afternoon, you know, like London session, this is what you want to see. This is what you want to catch here, you know, like simply like catching this inversion here. You know, you retrace, boom, this is your entry, then you start to move up higher. Even here, the order block retracement, boom, then you start to move up higher. This is what you want to have, quick speed and expansion for your trade idea. But if you're breaking all-time highs, you're not reaching to the discount, you know. Of course, you can trade the premium arrays, but as long as you have a higher time frame array in general inside of the premium, it shouldn't be that difficult. But again, I plan on really focusing more on the forex pairs and the indices right now, unless we start retracing into those higher time frame PD arrays like the daily buy center balance we're forming, or 4-hour PD array minimum. Just continuing to use, like, you know, the higher time frame to my advantage, and find the highest quality setup, so I'm able to have a good distinction of what, you know, probabilities are in my favor, and just put in the probability in my favor even further. Even though I can read the lower time frame order flow like this, and I'm gonna continue to learn and grow, I just really don't want to be, you know, losing. Even though the losses are inevitable, I want to be able to prevent them from happening just by having more conviction on the trade idea, you know, having a higher time frame PD array formed. So that's basically really it. You know, if you took this trade, congratulations. But yeah, that's pretty much really it. Peace.